For a closer look now at the jobs numbers and what it could mean for the Fed, let's turn to former Federal Reserve Vice Chairman Roger Ferguson. He's now a fellow at the Council on Foreign Relations, a CNBC contributor as well. It's nice to see you. So Jay Powell sees this morning and says what?
He says, look, first, we look at all of the data that have come in and try to draw a general picture out of that. And I think there are three separate forces that are going on here. First, over the last couple of days, we've seen that consumer spending still is very strong, which is net positive, but could feed to inflation. Secondly, we had some inflation numbers that I would say are a little mixed. So headline inflation staying pretty steady at that 0.2% month over month, good story. Looking down at what's called the core PCE services focus, that one was maybe just a little high. So, a little bit of a mixed story there. Today's job numbers showing what I think is a healthy economy, bringing new people into the labor force, leading to a somewhat higher unemployment rate. But overall, I'd say this looks like it's a mixed story, not one to be too panicked about, and perhaps supporting, a pause in September, but not taking future rate hikes off the table just yet.
I mean, Rick Santelli used the word Goldilocks. You could look at this and say, well, it shows an economy and a labor picture that's weakening, but it's not too weak. So it's maybe just what not only the Fed, but investors have ordered this morning.
I think that's a fair statement about the labor force, but I think we need to, again, today I know is jobs day, but one is to think through all the data we've seen all week. And I would say roughly, positive in the sense the economy is still moving forward. I'm not sure yet if I chair Powell that I would be certain that we're getting to that disinflation back to 2%, sufficient to sort of say future rate hikes off the table. I think it is premature. So it's one meeting at a time, very data dependent. September, probably the market has it right, probably a pause. November, I think the market may be discounting that being a live meeting, maybe just a little too early until we see a bit more data. And don't ignore that core PC number, which was a little hot.
So you disagree with Bostic, who says, you know what, we've done enough. Not only that, I think we might be back closer to 2% than some people would think. What do you make of that?
Look, I think the minutes showed something that's very important, and President Bostic's comments recognize that or reflect it, which is there are different points of view on the committee. Yes, President Bostic is speaking for himself, and I think reflects some individuals that say we've done a lot. Let's take a pause and wait and see, and maybe these numbers will suggest to him that they're done. We heard from other presidents that say, well, no, we're not sure just yet. You may recall that Susan Collins, the president of the Boston Fed, was certainly open to one more hike, and I think some of the others will be as well. So I think we have to be careful not to say, well, one of the voices speaks for the entire committee. There are, and I think there will continue to be for a period of time, different voices. Bostic reflects some, but there are other voices saying, well, we're not sure just yet that we can be totally confident of getting to that too. So let's keep the November meeting a live meeting.